Hi stock investors, JJ here. Welcome back. Well, is Apple running out of juice? That's the question today. I'm going to react to Aswath Damodaran, the Dean of Valuation, see what he's recently had to say about this. What does he think of Apple as a company and as a stock? Let's get straight into it.
Here with more on Apple and a few other companies in tough life stages is Aswath Damodaran, professor of finance at NYU Stern. I'm sorry if we had to get you out of class a little early, Professor. Welcome.
Oh, thank you, Kelly.
Let's start with Apple. The obvious, many people said, okay, once they went through this rebirth, once you get iPhones in everyone's hand, what's the metric goes here? 1 billion install base. The stock is a buy, massive buybacks. What can go wrong? Talk a little bit about what you think is going on here.
Apple's been a middle-aged company now for a decade. I mean, this isn't new. It's, I think once we got people out of flip phones into smartphones, it became a question of, really hitting, middle single-digit growth. I mean, you get these spurts around new updates. But it's been a middle-aged company. I think the problem, though, is the smartphone business seems to be running out of juice. I'm stuck on the iPhone 12. I don't even have the slightest desire to even look at the iPhone 16 because not enough is different about each version of this.
A good point. What do you think about that? Do you have an iPhone? I mean, a lot of people do. Are you going to upgrade during this cycle? Analysts like Dan Ives think this is going to be a super cycle with AI there, Apple Intelligence they're calling it, but really it's not immediately on the phone and you have to click through to what is going to be ChatGPT. It's not Siri. Is this enough of an update? He does say there that he thinks it's running out of juice. iPhone was a rebirth in the Apple cycle, now shifting to services in the face of slower phone demand, and once called Apple the greatest cash machine in history. Of course, Warren Buffett owns the stock. We'll have a look at that in a minute. He's been selling it. I think he's going to talk about that too.
And Apple gets about 75% of its value from the iPhone now. It's become heavily invested in the
75%.
iPhone and the subsequent updates, which means you're going to live through these update to update, corrections around the price. So it doesn't surprise me that people are a little disappointed, but looking long term, my bigger concern is what if the smartphone business itself starts to go into decline?
I mean, we can argue that it already has.
A little bit of an anecdote here. I've been an iPhone person since the very first iPhone came out. Remember, people were lining up, camping outside the stores back then. So as he said, it's a mature company now. It's been mature for a decade. I recently have swapped. I now have the top of the line Samsung phone. And I was looking at the specs there. I couldn't wait till the new iPhone came out and I really did need one. I haven't upgraded for quite a while. And it's good. It's great. The biggest difficulty was getting out of the so-called Apple ecosystem where they cap you in there. I still have a MacBook. I still have AirPod Pro here, but I'm enjoying it. It's a change to the Android system. But I think these phones are really similar now. As he said, there's only small upgrades between phones and they're so similar, the specs in them. It's really just a branding thing and being captured in that Apple ecosystem. That's just my opinion anyway.
The bulls would say it's all about services, it's all about subscriptions, and it's all about stock buybacks. But not to put too fine a point on it, what do you think the stock is worth here?
I think the stock is massively overvalued in any way, but I do think that all of those things are good, but you're trying to fill in a really big space. I mean, you can add the services business, but the amount of money that Apple makes on its iPhones is so immense that making up for it is not going to be easy, even with 3 new businesses.
It's a good point. If they start to go into decline with the iPhone, it's going to be really difficult to replace that. He said even with 3 businesses.
So the services business and the ecosystem that they have has to be dramatically large for it to make up for the iPhone. And that's always going to be a concern when you invest in Apple. As for the buybacks, that's really not an alternative. It just is a return of cash. And Apple has been very good about returning cash for much of the last decade. I think collectively, Apple has returned more than $600 billion in cash over the last decade, which makes it the greatest cash machine in history. So,
wow, did you hear that? Did you catch that? 600 billion with a B, not an M, they've returned to shareholders over the past decade. That's why he says it's been the biggest cash machine in history to shareholders. So, that's one thing that Warren Buffett would have been looking at. He looked at it as a consumer electronics company, understands it. I don't think he doesn't really use email that much or many of the features on the phone, but he does understand the company from that point of view. And as he said, it's been a big cash machine. Buffett didn't jump in till after Steve Jobs died, so he was really late to it. But he has had a multi-bagger since then, now cutting back because it became a big part of the portfolio, perhaps too big.
So I like the company as a cash machine, but not as a growth engine.
Yeah, and I think even at 188, you were saying, look, it's at 215 now. We're in the neighborhood of fairly valued, not dramatically over, but also not dramatically under. And a lot of people are probably just going to. I thought it was interesting that Berkshire sold half of their position. You'd think this is the kind of just sit on it forever. I think that was their intention. Does that sale tell you there's anything else at the margin that could really go wrong?
I wish I would read a signal about Berkshire Hathaway thinking Apple was overvalued. I think the reality was Berkshire was about 30% of its portfolio was Apple.
Wow.
I think it was just a concentration issue, which is when you have a third of your portfolio trapped in one company, it's a very dangerous place for anybody to be. So I think the pruning really reflected that overconcentration.
I hear you.
Yeah, it was a massive part of the portfolio. We'll have a look at that in a second. It's still a big part. It's not like they've been selling all the way out of it.
Hear Munger's words echoing in my ears when he says, you don't want to, spread. What was the phrase? You don't want to spread your eggs in different baskets. You want to put them all in one basket and then watch it very carefully. So I would view that concentration as a benefit almost.
I don't think Munger said all in one basket, just in a few baskets. He never had just one stock. I think he said that was possible if you really knew what you were doing, and it was a great company. But they take the point there that he was a big fan of concentration, but you really have to know what you're doing there.
And the counter I would have to Charlie is, I remember when he said that at his meeting would have been, would you take 30% of your money now and buy any one stock, no matter how great it is? And I'd wager he'd say no. So It almost seems like we have two sets of rules, one for investments we're going to make and one for investments we've already made. I think we need to be consistent.
No, that's very interesting. By the way, he's hardly alone, or they are, in facing that kind of dilemma, which a lot of investors run into. That's interesting you bring that up.
Let's have a look at the stock price now of Apple here. By the way, if you're getting value out of this video so far, I really appreciate it if you manage to smash that like button to help the algorithm to spread to more people. Relatively new channel compared to my other channel, The Art of Value. And do subscribe if you want to get this content on a regular basis. Hit that subscribe button. Okay, look at Apple here. So year to date, it's 22.93%, which is beating the S&P 500. So there's not a great deal to complain about. This is talking about the future of Apple. Is it running out of juice? Is it not going to be great? And if we look back over 1 year, we can see it's the S&P 500 is up 32% over the past year. Wow. But Apple's up 30.56. And over the 5 years, we've got Apple up 319%. So yes, Warren Buffett's done well out of that. S&P 500 is up over 90%. And we go to maximum here. Look at that. It's an amazing graph of 190,000% for Apple. Wow. That's incredible. And 661 for S&P 500, which is hard to beat as an index. It's been pretty good. So let's go and see Warren Buffett. We can see here that they've reduced 49.33% just in that past quarter. And they haven't added to much Ulta Beauty, of course, but we're just focusing on Apple today. And if we look at Apple for that quarter, we can see which investors have bought that. Christopher Bloomstrand, who is actually a big investor in Berkshire Hathaway itself, bought. Daniel Loeb bought some Apple. Thomas Gaynor just adding a little bit. He does that, just adding slightly every quarter. And then Warren Buffett there. Terry Smith from Fundsmith sold down a little bit. It's nothing to be writing home about, really. So what do you think? Do you think Apple's running out of juice here? Do you think that it's on the way out? Do you think it's worth holding for the long term, like Warren Buffett still seems to be? It's trimmed a lot. Would you be trimming here? What do you think? This is going to be a super cycle like Dan Ives has said, and Apple will go on and on? Or do you think this might be not the end of the road, but as he said, a mature company, very mature company now? Do you have it in your portfolio? Do you have Apple? How long have you had it for? Let me know in the comments what you're doing if you own Apple or any other Mag 7 stocks. And talking about a portfolio, I want to talk about this offer that I have, special offer for the Art of Value followers. This is on the other channel, but it all works together. I'll put a link to this landing page in the description to see this offer here. ShareSite is a portfolio tracking and reporting tool. You can put all of your investments in one place, even if you've got separate brokers. Brings the trades in automatically. You can bring them in historically, trades into there to see the true performance of your portfolio over time. There's also a video here to see more about it. I'll just leave it at that. So thanks for watching today. And don't forget to subscribe if you're new to this. Thanks for watching, and I'll see you in the next one.